Hey guys, welcome back to my YouTube channel, and in this video we are going to be going over the continuation model. This is the model that helped me a lot in my trading journey, got me a lot of payouts, consistent payouts, got me funded as well. So it is simple to understand and it is one of the highest probability model ever. And we are going to be using structure in it and trend in it as well. So before starting in, thanks to FTUK for sponsoring this course and making it accessible to everyone for free. And yeah, FTUK is a pro firm for which are who are in the industry from 4 years now, and they are consistently paying out to customers without any complaints. So let's dive right into it. Now, in this model, we are going to be using three time frames actually. Now I know that might seem a lot, but like trust me, it's simple, and it's going to be simple. Don't worry. So we are going to have a higher time frame, then a middle time frame, and then a lower time frame. So for the higher time frame, this is where we are kind of going to get an idea of where the market is heading. We are going to get our bias from. Now you can get bias from anything. Now I have taught a lot of methods in the course before, so you can check that out as well. But like in this case, I have marked out an FVG here, as you can see. So basically price is trending to the upside, and price is inside an IRL or an FVG, so we are going to expect it to go to the ERL here, right? So we got our direction from here. Then we're going to go to the middle time frame here, and when we go to our middle time frame, now I am also going to tell you what these time frames actually are, like the 15-minute chart or 1 hour chart, whatever. I'm going to go into that as well, but later on in the video. Then we're going to go into the middle time frame, and once, as you can see, it's that area here, it has hit this FVG, and then after that it has started going upwards. So this is exactly what we are looking for. We are basically looking for the market to go to the upside, or whichever way our direction is, or whichever way our bias is. So we are looking for market structure shift, which happens here, but we are not going to enter here. What we are going to do is that we are going to wait for price to take out a low while moving to the upside. So you can see it here, we have this low here, and the market has came lower and it has taken it out, right? And this is where you want to go into a lower time frame, and there you are gonna look for a market structure shift again, and then again a red on the low. And once that happens, you want to look for a break up the high or a break up the low, depends on the direction, and you want to enter as soon as the market breaks here. Now there are a couple of ways to enter, you can choose in them, which I'm going to go into later as well. But yeah, that is basically the entire model. It is as simple as that. You get a bias, then you wait for market to hit your IRL or ERL. Once that happens, you want to wait for the middle time frame to like get bullish or bearish depending on your bias. And on the middle time frame, you're looking for a market structure shift and a red on a short-term low. Now short-term low, I've already explained what that is in the previous lessons, or a short-term high, depending on your bias again. Once that happens, you want to go to a lower time frame chart, and there you just want to enter after a red on a short-term low, or if when an intermediate term low or an intermediate term high is created. So if you look into this, this is basically an intermediate term low, if you remember from the structure lesson that I have taught in this course for free. So this is an intermediate term low. We have a short term low to the left and a short term low to the right side of it. So yeah, now this is a bit closer look into it. So this is like your lower time frame, and once price hits that like short term high, or it takes out the short term low, once it breaks lower, you can wait for price to like come back into a PDRA to give you like the best risk to reward ratio. And you want to have your stop loss here, and you want to target a low below. Now I would personally target 2R only, so my risk to reward ratio would be 2R, but like it depends on how you want to do your RR and whatnot. It depends on your risk percentage as well, but for me it was 2R. You can target lows, or you can target 1 to 3R, or whatever your risk management plan is. So here's like again a summary of it. Get a draw on liquidity on the higher time frame, wait for intermediate term time frame or the middle time frame to go towards your direction, and then wait for a red on a short term low or high on your middle time frame, and then use entry pattern on low time frame to enter. So you can use any of the entry patterns that I've taught you in this course. Now here comes the time frame alignment. So there are like certain time frames that you want to look into. So for your high time frame, if you are like if you want to trade on the 1 hour chart, you want to select the monthly chart as your higher time frame. For the middle time frame, it's going to be daily. Then if you want to trade on the M15, it's going to be weekly H4 and M15, and then daily H1 M5 and H4 M15 M1. I have personally traded on the M1, but it works on all of these alignments. Now here are some examples. So as you can see, price has taken out external range liquidity or ERL. So we have an IRL here, which means that market is most likely gonna go back into this IRL. This means that our bias is bearish here. So we are gonna go into the middle time frame. Here's our middle time frame, and as you can see, we have like a market structure shift, and then like a break lower, and then there's this like short-term high, and then FVG as well. And after that happens, you can see there's like this another market structure shift kind of thing happening here. And this is where my entry was, and this is where my stop loss was, and I targeted the daily FVG that I was like targeting. Here's another example. So we have market going downwards. As you can see, the trend is to the downside, and we are inside an FVG as well, and IFVG are an inversion fair value gap. But yeah, if you don't want to get, I don't want to get this too confusing, you can just say the trend is going lower, right? And that gives us an idea of where the market is heading. So now if you go to the middle time frame, you can see again that we have like a market structure shift, and then we have like a trend lower. It's so price is basically going towards our direction, as we have mentioned. And here is like a short-term high, as you can see, and price has raided it. And now we are going to go to a low time frame chart, and after that happens, this is that short-term high raid. There's the market structure shift, and here is like this raid on a short-term high, a break lower, and this is my entry, this is my stop loss, and these are my targets here. By the way, I haven't really, I don't know, for some reason I haven't added the executions here, but they are present on my Twitter. But yeah, these are actually executed trades. This is not hindsight, by the way. Here's another one. So market structure shift to the downside, price is just clearly trending to the downside, but you want to focus on here, this is the higher time frame chart, by the way. So our drawn liquidity is bearish, our bias is bearish here. Now this is the middle time frame. So we have a market structure shift, and then we have a red on a short-term high here. So now we are gonna go to the 1 minute chart in this case. And yeah, again, market structure shift, red on a high, and then break lower, and then entry here, stop loss here. I have two entries here, one is here, and then another one is here. And yeah, that is basically it. So if you have any questions, you can let me know, and make sure to check out FTUK, link will be given in the description. And yeah, tag me on Twitter, DM me on Twitter if you have any questions or anything, or leave a comment down below, like this video, and see you in the next one. Bye bye.